Welcome to Real Estate Talk, part of the Realty Media Group. We also produce The Property Show, Real Estate Uncut and CoreLogic's auction updates. All available for catch-up anytime at realty.com.au. Before we get underway, thanks to BMT Tax Depreciation, Printforce and Propertyology for their support. COVID-19 has hit the rental market harder than the buyer's market, with a combination of falling demand and rising supply. Home ownership is not for everyone, but secure housing certainly is. Today I discuss just how severe the impact has been on rentals with Eliza Owen from CoreLogic. We've always said that there is no one market in the country. Each state, region, suburb and street is impacted differently. We're really noticing that difference right now. So Veronica Morgan will talk to buyers agents in two states that have been impacted differently. Veronica talks to Meighan from Brisbane and Claire Corby from Canberra. As Melbourne enters a second lockdown, the country holds its breath as we struggle to restrict the spread of the virus. But business must go on. Veronica talks to Jared McCabe from Wakeland Property Advisory. Now, this is an important conversation because Melbourne is classed as the canary in the coal mine. But first up today in the show, the apparent rise of the Canberra market is something that's become very clear as most markets around the country experience some COVID stress. Veronica Morgan catches up with a buyer's agent colleague of hers from Canberra, Claire Corby, to find out what is exactly behind the Canberra good times.
Claire, you're a buyer's agent who is on the ground in Canberra. Now that the coronavirus restrictions are easing, tell us what's been happening in that marketplace.
You know, it's a funny market, Canberra, isn't it? Because it's a tale of two markets right now. We've got the unit market and then the freestanding home market doing quite different things.
Two-speed market. So this is quite interesting, actually, and I was going to get to that, but you've jumped right into the sort of my last question, which was going to be, what is happening with new development in Canberra at the moment?
Yeah, it's quite interesting. We've got cranes littering the skyline, and they have done for quite some time. And it's interesting, some of the bigger developers in town have shelved a couple of their developments too. So I think, and I hope that we're going to see a bit of a stop in this supply, and that's just been, full steam ahead for some time now, and especially now that we've got, tourism perhaps waning a little bit, as well as university demand. Mm-hmm. Perhaps the demand for those things are finally filtering through to those who produce this, or maybe it's just their margins have finally dried up and they really can't find anyone to buy these things anymore. So money talks, doesn't it? Quite some time with the redevelopment along. If you've been to Canberra and driven down that corridor of Northbourne Avenue, you will have seen how that's changed over time. So all of that now being redeveloped and those public housing units being, I don't want to say redeployed, that sounds so clinical, doesn't it? But, transferred elsewhere. Yeah. And then those pockets are being gentrified, for want of a better word. So, there's a bit of change along that corridor there. And that's definitely been in the unit market there for some time, with that higher density along that corridor, but also closer in the city and other satellite areas in town as well.
So that's the sort of the unit market you're saying is really saturated by the sounds of it and not really turning over much in terms of buyer demand. And there's a two-speed market you've referred to. What's going on with houses in Canberra?
Houses, it's quite a different story. We've had such low supply this year, and I know other capital cities are the same. Us buyers agents, we talk to one another, don't we? And how's it going in your neck of the woods? But this year volume is way down. Some suburbs are transacting for the whole year. We're still in single digits.
Right.
Yeah, enormously down. It's fallen off the cliff.
And so what about prices? So I'm presuming that's meaning there's quite a lot of upward pressure on prices.
Definitely, yes, especially if it's good stock. So if it's an A-grade property that really appeals to that, especially that upsizer segment, that second family home where they're wanting two living spaces and sort of room to stretch out, very, very competitive. Prices are just going off.
So that family segment is the most competitive? You think that there's the most demand for that type of property?
I think so, especially I think, looking at the year that we've had so far as well. I mean, I think the saying of the year is because COVID. But yeah, people all hemmed in on top of each other. If they're in that typical 311 ex-govy type home that Canberra seems to have a lot of in its outer suburbia, then there's a lot of pressure on space. You know, if you've been homeschooling the kids and everyone's on top of each other, having a 422, 4-bedroom, 2-bedroom, 2-bathroom, let's translate here. But maybe your viewers are better versed in that kind of lingo. But yeah, having that room to breathe and just a little bit more space, especially more living areas, there is a big demand for that.
So when you say that transactions have been in single digits, and there is a difference between listings and transactions, because in other states or other cities we're hearing a lot about the off-market, the rise of the off-market transaction. Is that the same sort of thing you're seeing in Canberra?
There is. I've done a few more than usual, yes, off-markets. But I think as well, just the fact that people aren't willing to move. Canberra's quite a transient town. So just not having that usual and that typical movement through our population that we might normally get in other years. I think with everyone bunkering down this year and contracts being locked in and perhaps businesses being a little less, what's the word?
Optimistic.
Yes, exactly.
Yeah.
So yeah, not looking to do as much hiring and movement of people that we might normally see. Perhaps people have been less willing to transact. If they've got the space and they're happy, there hasn't been that pressure for people then to move on. Whereas it's mainly I'm seeing from people that are in a smaller home looking to move up to a bigger home.
Right. Okay. And so those in the larger homes, where would they normally downsize to, or are you saying that they would potentially be moving out of Canberra?
Oh, potentially. Some people then get sick of it, get sick of the weather and want a coastal change. I can appreciate that. This last winter has been we're still in it, aren't we?
I know I've heard about -3 in the morning I've been hearing lately in terms of on the weather reports.
Yeah, don't even look at the apparent temperature. That's all I can say.
Oh, that's a bit miserable. Yeah. Now, what are you seeing in terms of investor activity? Are you seeing any investors wanting to buy, or is it purely upgraders?
Yeah, it's a bit of a mix. Personally, from working with my own clients, I know there's been sort of mixed bag. Some investors have tapped out, said, look, we're out for this. There's too much risk for us. We're not willing. And I guess Canberra does tend to attract a less or more risk-averse investor client.
Are you seeing any interest from interstate investors, given that there's a bit of positive media around about the Canberra property market right at the moment?
Yes, yeah, definitely. There is positive sentiment around Canberra, and I think that always attracts people who might be fleeing the stomach-churning turns of Sydney and Melbourne for something a little more tolerant. We tend to go to Canberra for that safe market. It's a nice little place to cook your little nest egg.
So what is it that makes Canberra so safe? Is it purely that there's so many public servants and safe government jobs?
That is part of it as well. I think as well, just the whole culture of Canberra is a very conservative town. I say that, we have the Canberra uniform, and I'm actually dressed in dark colours today, but right. Walking around in winter, it's very conservative, everyone, the mood and the whole tone of it. We do have a bit of an undercurrent though with arts and the cultural side.
So you're suggesting that conservatism inherent in Canberrans is actually what's been filtering into the property market at the moment and actually reducing supply, and that's really what's containing price or supporting prices.
It's a combination of factors, and I think everything plays into one another as well. We can't take one thing on its own. I think as well the public service, that's definitely a big part of Canberra, but it's also part of our history and, growing up with my parents' public servants, my grandparents' public servants. So perhaps it's in our blood as well now. I don't know, being a little bit more conservative, but it's certainly part of the makeup of Canberra.
Now, what's really been interesting has been the auction clearance rate in Canberra. And last weekend, I believe it was 96%. What on earth is going on there?
Yeah, it's been a bit volatile lately and up and down. And some weeks you look at the stats and think, oh my goodness, wow, that was high. But I think when you look behind the figures, as we always need to do, and see what story is actually really going on, Canberra doesn't have a lot in terms of volume. When you look compared to, say, Sydney and Melbourne, who get through quite a lot of auctions on a weekend, Canberra can be quite low, especially right now. There might only be, a handful, 40, 50 odd properties going to auction. So when you see the results of those, it can really, sway the figures one way or another. If we've got some really good A-grade properties in there, certainly we're going to see very high clearance rate, especially if they are those good quality, larger 4-bedroom, 5-bedroom even family homes. Whereas if, some auctions might only just be the agent, that's their way of selling. We definitely have a strong auction culture for freestanding homes here in Canberra. It seems to be the preferred sale method for a lot of agents. So it just depends sometimes on the quality of the stock up that weekend, but it is a good sign and a good indication of how much it is a seller's market here in Canberra right now for homes.
So when you say volatility, what would it bottom out at in this sort of current climate?
Oh, throughout July, it's sort of been upwards, 80 something and then 50 something, and then, might be back in the 90s and then down in the 70s. So, but overall, I think the pattern has been consistently quite high overall, sort of 80s, 90s as an ongoing trend. We had those figures again back in February. So coming into COVID, we were already in very, very pent up demand mode.
And interesting because, in other cities, we certainly in Sydney and Melbourne and Brisbane for that matter, then auctions were outlawed basically. On-site auctions were outlawed anyway. Did the same thing happen in Canberra?
Yes, same thing. So that last weekend in March, everything got pulled forward to that weekend. And there were some crazy results up and down, both on that weekend, as everyone rushed to get it pulled forward. And then people took their position on one side of the fence or the other as what they thought would happen with COVID.
So it certainly sounds like the same fundamentals play out in the Canberra market as they do in other cities, that, really good quality stock will still march out the door. Stuff that struggles will sit around for a lot longer unless it's priced appropriately. Look, thank you so much for those insights into the Canberra market, Claire. A lot of our listeners on the podcast, the Elephant in the Room property podcast, have been asking about the Canberra market. So we will interview you and get into this in more depth very shortly. In the next coming weeks, we'll have that episode go live.
There could be more money in your investment property than you realise. BMT tax depreciation finds, on average, between $5,000 and $10,000 in deductions in the first full financial year for residential property investors. They'll work with your accountant to make sure no depreciation deduction is missed. They even provide comprehensive ATO-compliant tax depreciation schedules that last the life of the property, up to 40 years. And their fee is 100% tax deductible. Call BMT Tax Depreciation on 1300 728 726 now for a free assessment of your likely deductions.
Welcome back to the show. The focus of housing affordability is often on buyers' minds. Rising prices, interest rates and deposits needed to get a start in the property market. However, COVID-19 has hit the rental market harder than the property buyers market, as is evidenced by a report from CoreLogic that I discuss now with Eliza Owen. Eliza, how has the rental market been impacted by COVID?
Well, COVID's had a really interesting and specific impact on the economy and the way that is slowed down. And that's had a particular impact on the rental market. So what we've seen is the payroll jobs data is showing that employment across sectors like food and accommodation and arts and recreation has been particularly impacted, with about 20% of jobs lost from the start of the pandemic to the end of June. We've also seen that international migration has effectively stopped. Now, the reason these two facets of the downturn are important for the rental market is because the people working in hospitality, tourism and the arts, they're more likely than any other sectors to be comprised of renters. And we also know that of international migrants who come to Australia, about 80% of them rent when they first get here. So the way that COVID's really impacted the rental market is to impact those two dynamics, and it's had a specific downturn on rents, and so that sort of led to a decline of about 1.1% in rent values across the combined capital cities markets. Regional rental markets have held up fairly steadily over the June quarter, but I would expect that eventually they'll see a bit of dampening as well.
We might have a look in a moment at some of those specific areas, but just in an overall sense, what have you noticed with supply of rental properties?
Well, across Australia, we've seen different dynamics across different capital city markets. Overall, we've seen an uplift in total rent listings in Melbourne of about 16% since the onset of the pandemic to the end of June. Similarly, in Sydney, we've seen a bit of an uplift of about 3%. But interestingly, across all the other capital cities, total rent listings have continued to tighten between mid-March and the end of June.
What about the short-term rental market? Because we saw that was powering on well before COVID, but then with the impacts of lockdown and social distancing and so on, I imagine that's been hit reasonably hard, has it?
Yeah, I think it's definitely had an impact of increasing supply at a time where demand was already falling away because of COVID. So that's put added pressure on rental markets. I think one thing to be wary of is that for tenants in certain markets where they've had high exposure to those sort of Airbnb accommodations, areas like the Gold Coast, inner city Sydney, inner Melbourne, there is a lot of choice around with people owning these Airbnb properties and trying to convert them to the long-term rental market. But it is important to remember that this kind of situation we have with COVID and closed borders is temporary. And I would imagine that once we start to see international borders open up, and I think already as we've seen interstate borders open up and domestic tourism kind of come back, that we will see Airbnb owners potentially reverting those properties back to the short-term accommodation market.
In your affordability report, you focused on rental properties around Australia. You also provided a list of the areas. Which were the ones that were most dramatically hit, would you say? Is it regional or city areas? And can you identify a couple for us?
Yeah, it's definitely inner city that's been most impacted, and that's because they're the markets that have the highest exposure to things like overseas migration as a source of housing demand, and they also have a relatively high exposure of their workforce to the sectors that have seen the biggest job losses, such as hospitality, tourism, arts and recreation. So the kind of areas we're talking about there are the inner Melbourne region, where total rent listings have seen an uplift of 60% since the start of the pandemic.
Wow.
In Sydney's city and inner south, rent listing volumes have increased by above 50%. So yeah, those are really areas where we've seen quite a dramatic uplift, and that extends to inner city Brisbane as well. It's not been as extreme there. We've seen about a 10% uplift in total listings, but seasonally we would have expected listing volumes to come down anyway. I think that is what explains a lot of the decline in rent listings broadly across the capital cities. So to not only see rent listings increasing, but increasing by those kind of volumes, it just shows you how dramatic the impact has been.
Eliza, just before I let you go, take you in another direction, we're heading into, yet another weekend of a lockdown in Melbourne. And over the last couple of weeks, we've seen the number of properties withdrawn from the auction market increasing, particularly out of Melbourne. Do you see that worsening, and are you anticipating a drop off in listing numbers because of that?
I think so. And it was something that we saw with the first round of COVID-19, was that rather than a lot of properties not selling at auction, properties were just not going to auction. Even though real estate agents, I think, have been really adaptable in trying to use new technologies to sell properties via the auction method, it's not something that's had, I think, really enough uptake that would enable us to have the same auction volumes as we might see outside of lockdown. And I think that was definitely reflected this past weekend. Melbourne's clearance rate had a preliminary result of 47%, but most of that was due to properties just being withdrawn from auction. So the portion of properties that were scheduled for auction that ended up being withdrawn, that was sitting at about 43%.
Yeah, it also identified, didn't it, the number of sellers who are willing to meet the market, not necessarily go all the way to auction, but take a sale prior to auction, Eliza.
Yeah, absolutely. And again, that's something that we saw during the first wave of COVID-19 cases and lockdowns throughout Australia, and particularly in our high auction markets of Sydney and Melbourne. The two trends we saw was a big uptick in withdrawn properties and a big uptick in properties sold prior. So about 80% of the properties that were selling under those auction conditions were technically under that sold prior condition. It does show that there's still an appetite to buy and sell property, but certainly the current lockdown measures across Melbourne will mean that sellers will be adapting to try and market their property in the best way possible.
Well said. Eliza, thanks very much for your time.
No worries. Thanks for having me.
Of particular interest to property investors holding property in Queensland was an initial plan by the Queensland Government in April of this year to make a move on legislation that beefed up protection for tenants. It was met at the time with powerful objections. So to find out what's happened since then, Veronica Morgan talks to Brisbane buyer's agent Meighan Wells.
Meighan, you're a buyer's agent who's on the ground in Brisbane, and now that the coronavirus lockdown restrictions are easing, what's happening in the market?
It's been a really interesting time. So we had that incredible sense of fear where everybody's pulled up stumps in April and really nothing transacted. But through May, people became a little bit more confident, and in June, I would say that the activity was almost at kind of normal levels, pre-COVID levels. But interestingly, it has only been in the owner-occupied space and not in the investor space.
Oh, that is interesting. I was going to ask you about that. So you jumped ahead in my questions there. Because back in April, though, there was a lot of objection to the Queensland government's initial plan for tenant protection legislation. What actually ended up happening? What was the wash up of that?
Yeah, what was proposed was really one-sided. It was really about protecting the tenant, and what the REIQ and a number of organisations and myself and landlords and real estate agencies did was really lobby heavily to have a very fair set of legislation, emergency legislation that protected both the tenant and the landlord. And as a property management company, we have found that process to be very easy to implement. We found it to be very fair on both sides. And I did read recently the REIQ did a study, a survey of property managers in Queensland, and only 6% of renters in Queensland actually qualified in accordance with the legislation for COVID relief, rental relief.
Yeah, because what we understand
was that it hasn't been as big an issue.
Sorry, we got a little bit of a glitch in the internet here. But so what I understood initially was that there were no clear requirements around what made somebody qualify or not, correct?
Yes.
Yeah.
Spot on, Veronica. And that was the difficult thing for property managers to try and navigate, was if we can't ask a tenant to prove that they've been affected, then every tenant can just ask for relief. And we had no guidelines on how we could say yes or no. It was really then just up to the owner to say no, to then go to a mediation process. What was actually put in place was much better. We really could assess and get the information that was needed to take it to the owner to be able to make an assessment on how long and how much they could give relief to the tenant for.
So it is interesting that you say only 6% of tenants actually qualified. What's been happening to the vacancy rates in Brisbane?
Certainly a lot higher, and the amount of time it's taking to lease a property is a lot longer than it was in the same period last year. So we're seeing now properties, this is our second peak period for renting properties. It's where most tenants, apart from January, February, where most tenants are looking to relocate. We're just not seeing that demand, and we're certainly not seeing people coming from interstate or overseas to Brisbane, which is another big lot of influx of tenants that we often see around this time of year. So we're not seeing this second peak period that we normally would and have seen for 10 or 15 years. So the vacancy rate higher, and periods of vacancy between tenancies is longer.
And so what sort of downward pressure then is there on rents?
Hasn't been a huge amount, but there has been somewhere in that vicinity of say 5 or 6% is what we and in talking to other property management companies have seen about the same. So a little bit down, but But properties that have been hard to rent in the past, they're the ones that are probably suffering a little bit more, and that downward pressure. If they're not in a great location, or they haven't got a good layout, or they're missing things that tenants are looking for, tenants have got a little bit more choice now, and they're being a little bit fussier. And those properties that are a little bit maybe sub-quality are taking a bit longer and have got a little bit of a drop in the final outcome when we do get a tenant.
It's the same story across the board. If the foundations aren't there, then it's going to suffer. What about listings? Are you finding that a lot of landlords that maybe are struggling to rent their property, are they turning around and saying, well, I'm going to list it and sell it instead?
There's a little bit of that. So we have seen a little bit of investors selling, but not as much as we've seen owners moving into investment properties.
Right.
So we've seen repatriation of expats who have been living and working overseas, who have moved back and moved into their property, which probably their original home anyway. They left, maybe have been working overseas for a number of years, but have now moved back in. So that is sucking up a little bit of the supply in the executive leasing level of the market. And that's something that we hadn't really anticipated, was to see that level of repatriation and people coming back into those properties. So anyone looking for an executive level property isn't going to see a lot of choice in Brisbane at the moment. And I think probably going forward for quite a few years, until people start going back overseas for work.
That's interesting. That's the first time I've actually heard that reported. There's obviously been a lot of talk for many years about oversupply of unit stock in Brisbane. Is that
your favourite
my favourite topic,
Veronica?
Would it be fair to say that there's a two-speed property market up there? Houses versus apartments?
I think there's multiple speeds. I mean, we're probably sitting on a 12-gear bike.
Right.
There's certainly the apartments have suffered the most downward pressure and the highest levels of vacancy, because there is so much to choose from. And I know I'm jumping ahead on what you might ask me shortly, but that supply is somewhat being soaked up by first-time buyers, and that's where we're seeing quite a lot of activity. And there's been some stimulus and grants and so forth to activate that market. And it is that unit, apartment, big complexes that are probably being most sought after by first-time buyers. And that is not what we would recommend for first-time buyers, but that's probably the strongest market for that type of product at the moment.
Yeah, which is a bit of a shame, and you and I do have a bugbear on that. I've also read that the recent the take-up of the federal government's recent sort of renovation and builder incentive has been greater in Queensland than most anywhere else. What do you make of that?
We love to renovate up here. We love to take an old Queenslander and turn it into a gem. But I think what we probably saw was there were a number of people who were ready to take that step to renovate their Queenslanders. They'd raise them up, build underneath, turn them into quite large family homes. And perhaps those projects were put on hold during the uncertainty of April, May. I think the stimulus has possibly given those people the confidence to move forward if they qualify. There's obviously a number of hoops to jump through before you can actually access the grant. But I think there has been some people that reinvigorated or moved forward their delayed plans. And I've seen a multitude of Facebook advertising and promotions of new build companies really pushing that bandwagon of, you can use your first home buyer grant, plus you can have the builder's grant, and we'll throw in some money as well. And suddenly you might be saving $40,000 off the recommended retail price of a house and land package. Again, that's not something that I advocate unless it's an infill property, not a greenfield sort of site. But I think that's something that has been taken up quite strongly, and there's some firms that have really jumped on that bandwagon and pushed that out to the marketplace.
And anecdotally, I've heard stories about builders that have actually put in an additional clause to say that if it's going to be signed, they're going to sign a contract before December 31st, for instance, that there's going to cost, there's a fee for that, and there's a fee for starting within the 3 months. Have you come across any of that?
Haven't heard of any of that. Tell me more.
Well, just those.
So, Veronica, tell me a little bit more about that one.
I've only heard this anecdotally. It's not really my space, but it is quite amazing how you can come across people that will always seek to take advantage of a situation. Those that are meant to benefit aren't actually benefiting. Of course, you and I have been working on a course and a mentoring program for first home buyers so that they can avoid any of these sort of pitfalls. I'll see you again next Wednesday night because we do our weekly Facebook Live, 7:30 p.m. on the Home Buyer Academy Facebook page. Thank you so much.
On the Facebook channel.
On the Facebook channel. Thank you so much for joining me today to chat about what's happening in Brisbane for not just first home buyers, for investors and others.
Fabulous place to buy a home, Veronica.
You're a big Queensland advocate.
I love it.
With the evolution of social media, marketing of property is no longer linear. Consumers are influenced differently. The Property Show is unique in that it empowers agents to connect with buyers and sellers through personalised content, social media and artificial intelligence. The Property Show delivers personalised, laser-focused marketing by combining new media, social media and audience targeting, and gives the agent a digital voice. See how well the Property Show works, and then let's get started telling the world about your property. See it now exclusively at realty.com.au. In an effort to capture the mood of the full Australian market, Veronica takes Melbourne's property temperature as she talks to Jared McCabe from Wakeland Property Advisory. All eyes are on the Melbourne market at present as that state struggles with new lockdown restrictions.
I think the whole of the country is feeling for Melbourne at the moment. Since you've had to go into second lockdown, there's also a sense that your property market is a bit like the Canary and the coalmine, so to speak, since none of us are really out of the woods regarding this pandemic. Jared, what are you seeing on the ground in the Melbourne market right now?
Certainly a bit of deja vu, Veronica. It's feeling like we've stepped back to April and May earlier this year. There's been a lot of auctions that were planned to go ahead over late July and into August that have been either postponed or withdrawn.
Right.
Some of them have changed their method of sale, so we're looking at auctions. They've gone to an online auction. Others have gone to an expression of interest or perhaps just a purely a private sale. So I guess the one positive is that because we have been through this before, it seems as though everyone's adapting quite well and are fairly familiar with things in terms of the technology that's available and the different methods of sale. So people, but it differs depending upon the location and type of property. So the more conservative type, perhaps family-owned, family-type properties, perhaps in the sort of 2 to 5 mil type bracket, there's less confidence probably in the online or perhaps the demand isn't quite there, so they're not necessarily going down the online auction path. Whereas certainly in the sub 1.5 mil bracket, the appetite is definitely there and the online auction method is certainly still working really well.
It's interesting. We interviewed Damien Cooley a few weeks back, and he came up with the exact same sort of observations in Sydney, that the eastern suburbs where you've got that sort of more higher price bracket property, less uptake of the, or less adoption, less comfortable adoption, shall we say, of the online auction platform. Whereas in areas where there's more millennial buyers or a younger demographic, I should say Melbourne is actually seen as the auction capital of Australia. So how are buyers and owners and also agents dealing with having to look at other methods of sale?
Yeah, look, it is interesting. The concern from a buyer's perspective can quite often be around how will that alternate method work. So sometimes with, say, an expression of interest campaign, there is a great deal of uncertainty as to how that will work. The transparency is not obviously there, but also every agency handles an expression of interest campaign differently. Yes. So trying to get your head around that and understand and make sure that every time you engage on a property that's an expression of interest, you have to start again and understand how that agency is going to handle that expression of interest. And it can get down even to, as I'm sure you've seen, agents within agencies handle things differently. So it's understanding what is going to be the case with that method of sale and make sure that you get everything in line. And obviously there's different requirements in terms of the methods of sale. So what a vendor and an agent may require through an online auction will be different to what a buyer will require and what they will want. So the idea from a buyer's perspective is that we like to see the transparency. We like to see that be able to eyeball every other buyer that's there to make sure that they're genuine and you can get a bit of a feel for perhaps what they're doing. Whereas some of the online auction methods don't necessarily offer you that, don't necessarily give you the opportunity to have that viewing of all the other parties, you can see the bidding and you can see that they are actually bidding with those with the tracking there, but you don't always get to be able to eyeball things. So the understanding what is going to be needed, and again, we're still developing that and still understanding as to what everyone feels comfortable with.
It is interesting, isn't it? A lot of buyers don't realise that's one of the real benefits of auction, is that transparency.
Absolutely.
And I mean, I was at an auction myself only on the weekend, and there was one of the agents from the agency, because we're obviously allowed to have on-site auctions at the moment. He was on the phone bidding with a buyer elsewhere, and my client was even saying, is that a dummy bidder? And I can absolutely understand why anybody watching this would think that they're a dummy bidder. But the reality is, I said, well, actually they're over the reserve, so it wouldn't be a dummy bidder. Or they'd be really stupid.
Yeah, exactly right.
Do you think that the accelerated sort of adoption of new technologies will benefit the industry overall? Have you seen any standouts in your opinion?
Yeah, I definitely think it will. I mean, and the adaptation and the want to embrace technology, I think it's probably been one thing that's been really lacking within the real estate industry. Even you look at, say, even just the ability to pay a deposit and the fact that for so long there was still the expectation that someone would bring along a cheque. And it was so frustrating. There is a number of agencies around Melbourne who are still struggling to understand that and feel as though, well, you need to be able to pay in an alternate method because the majority of us don't have checkbooks anymore. So I think, but those that are engaging and those that are adapting will certainly see the benefits of it long term. Look, I mean, I still love going to an auction on a Saturday and being with people and around people. I don't see that changing, but will there be a bit more flexibility around it and perhaps giving people options as time progresses that you could be in person or you could be able to bid online, which in the past has never been. You've either had to be on the phone to an agent or to an advocate or to a friend to do the bidding on your behalf. I think there will be opportunities to do that going forward. Personally, though, I'd much rather stand there and be able to eyeball everyone and see what's going on.
Yeah, me too. I totally understand that. Now, with vacancy rates, there's been a lot of word or data out there around Sydney inner city vacancy rates and Melbourne inner city vacancy rates. How are they looking at the moment?
Yeah, look, it's interesting. It's certainly, if you compare it to, say, earlier in the year, now the difficulty around comparing vacancy rates to, say, January, February, which is that's when they're at their best. That's when they're at their lowest levels. They're always looking good because that's when the uptake is so strong. I've got some numbers here, but certainly around some of the CBD in Melbourne and around, say, areas like South Bank where it is a high proportion of apartments. And that's where you do get a lot of overseas students that are living, but also there's also a lot of Airbnb type accommodation. And that's where the greatest hit has been taken. And there's numbers there whereby, say, South Bank, the vacancy rate in February was around 5%. It's up around 16% at the moment. So it's taken a big jump. But if you look at metropolitan Melbourne as a whole, it was around 1.9% earlier in the year, and it's now at around 3%. So I think it's certainly been impacted, but has it been as drastic as what we may have expected? I don't think so.
So the knock-on effect hasn't really been felt far and wide? No,
there has been, but not necessarily to the extent that may have been expected. And look, I think the other thing to bear in mind is the JobKeeper, job seeker, and when we're obviously going to hear about that later in the week as to how that's going to progress into the remainder of the year. That will certainly give an indication as to whether that knock-on will continue and perhaps whether it may actually gain momentum and start to become a little bit worse. But thus far, certain sectors have been, as we've seen. But if you look at, say, some of the inner city housing market, that seemed to be fairly resilient.
And so that's vacancy rates. What about actual stock levels? Are you seeing that there's a lot of that stock coming on the market available for sale, or it's holding firm?
The difficulty around that is that it's hard to be able to offer vacant possession. And so if you're an investor and you've got a property that hopefully has got that multifaceted demand that we talk about, if you've got owner occupiers that are going to be interested in that property and you've got a lease that's still in place under a fixed term, it makes it quite difficult. And even trying to offer vacant possession on a month-to-month lease at the moment is not as simple as serving a notice to vacate. You've got to go down the termination path, and that's then going through VCAT and having to justify it. So it's not as straightforward as it would normally be. So you need to make sure that you're going to be able to offer vacant possession to maximise that dollar. Otherwise, you are really limiting your buyer profile.
What about those that are vacant? Are you seeing much of that stock in the market?
No, not overly. And it was starting to build up through June and July when we were starting to see a bit more positivity. But we're certainly seeing now that things are being held back. There's agents that are testing the market during this second lockdown period, so looking at it more from an off-market perspective, because we are seeing that that vendors are loath to put properties on the market and spend thousands of dollars on advertising for no real benefit. So there's almost a testing of the waters and saying, let's see what we can get through the next 6 weeks. If you can sell it off market, I don't have to pay advertising, great. But I think we'll see that there'll be a bit more of an influx of stock once we hopefully come out with some containment of the virus over the next few weeks. And that will give people a bit more confidence to put things to the market in September and October once we can get to some form of normality around different methods of sale, particularly that auction process, be able to get more people through properties through open for inspections.
But obviously if people have the ability, I guess, to withdraw their property or put it on hold, they're not feeling that financial pinch that's forcing them to sell. Are you seeing that there's sort of areas where, or even locations or property types that perhaps you think are more COVID proof than others?
Yeah, it comes back again. I know I say it a lot and people make mention of it, but that multifaceted demand is really important. So if you've got properties where there is that, particularly you mentioned before, the young couples, young families, singles, sort of sub 40, 45 age bracket, they're quite still active in the market, not just in that auction method, but probably particularly those that are feeling fairly safe and content in their jobs. They're not necessarily feeling as, they're a bit more, less concerned around the virus. And as a result, and we're seeing that even in numbers of people testing positive there, you've seen that there's been an influx of people in the 30 and sub 30 age bracket that have tested positive because they don't feel as concerned about it, obviously wrongly, but they don't. And that's, they're transacting more in that real estate sector. So what sort of property is I guess, COVID proof? Well, it's more that established inner city suburbs, so single fronted cottages, terraces, older style apartments, villa units are still doing reasonably well down in Melbourne as well. That not the high rise sector, certainly that's really suffering, but the older style established apartments, we are seeing a lot of young couples and investors and agents are certainly reporting good interest in those sorts of properties, even in the second lockdown period.
So it's quite interesting because, of course, everyone's heads were spinning when it first happened. Certainly in Sydney, I know that you saw a lot of panic sales or people just that whole idea, I don't know what's going to happen, and so therefore I need to jump out of this sinking ship. So you're seeing less of those in terms of none of those panic sales, or you're seeing still a few of those?
Well, I think the one difference this time is that at this point in time, the government has put not an end date, but certainly given some timeframes around it. So it was a 6-week lockdown period. So people are almost working towards that. I think it's around the 19th of August is when the 6-week will conclude. And so people can almost see an end, so they can work towards that. Now that could obviously be pushed back, and with the numbers that are going, that could very well happen. But it still gives a bit more certainty, whereas last time it was, look, we don't know when we're going to be coming out of this. So if you need to sell, you need to work around it now and try and get a transaction through. Whereas this time it's, well, let's see how we go over the next 4 to 5 weeks. And when we get to that mid to late August timeframe, if things are a bit more in control, then we perhaps can have an auction. If we can't, well, then things probably won't be all that different to what they are at the moment.
Yeah, and I guess a lot of the uncertainty was around, well, will we be able to actually inspect a property? Will we be able to move house? Should we actually find a property? Will I be able to sell my house as well? That's all those questions going on in buyers and sellers' minds. Look, thank you so much for sharing your insights, Jared. What happens in Melbourne now could well happen in other cities as we continue on this COVID-19 trajectory. So it is quite sensible that we do keep an eye on what's happening in your neck of the woods and remind ourselves about the market fundamentals, as you keep pointing out, that properties that have multifaceted buyer appeals, so those that a lot of different types of buyers would want to buy, they're pretty robust.
Absolutely.
Thank you.
Thanks.
Well, that's it for this week. Thanks to our guests, Claire Corby, Eliza Owen, Jared McCabe and Meighan Wells. And of course, Veronica Morgan from Good Deeds Property Buyers and Elephant in the Room podcast for her support with anchoring parts of the show. In fact, next week, the full show will be jointly anchored by Veronica along with Meighan Wells in a very special edition of Real Estate Talk. Don't miss it. Watch out for that. And don't forget that you can catch up anytime on all of our episodes and segments by going to realestatetalk.com.au, or in fact you can catch up on all of our shows at realty.com.au. I'm Kevin Turner. See you next time. Real Estate Talk, part of the Realty Media Group. We also produce The Property Show, Real Estate Uncut, and CoreLogic's auction update shows. All available for catch-up anytime at realty.com.au. Thanks to BMT Tax Depreciation, Printforce and Propertyology for their support. Watch out for us in your inbox next weekend or catch us anytime at realty.com.au.